Well, this week is marked by a horrific tragedy. It's also a hectic week for traders. Pro trader Michele Schneider is joining us now for a first look at the market action. She's with MarketGauge. Mish, the Fed and big tech earnings rolled in. One of them, IBM, had an outstanding profit report. You predicted all was well at IBM. Would you still buy the shares?
Well, I like to see some kind of a consolidation when you have this level of a gap. And considering the overall market conditions, we'll see what happens, because if you're looking at bonds, the yields are falling. That may not be the best sign. But nonetheless, I do believe that this stock can go to 350, maybe even higher. So it's really going to be a matter of risk parameter.
This is the final trading day of January. What's happening with the January barometer?
Well, I definitely think that's as January goes, so does the market. And yet we are so bifurcated, to overuse that word. So essentially what I would focus on, the things that broke out of the January range and aren't chopping around, that actually are showing momentum. And believe it or not, one of the big areas is in the metals, silver, gold miners finally moving. So that's really kind of where my focus is right now. Commodities in general, corn would be another one I think I've talked about on this show. So follow that momentum rather than finding things that are just eking out and chopping around.
Let's talk about gold, trading close to $3,000 per ounce, pricey for an everyday investor. But you say to go for gold miners. What would be your gold miner ETF pick?
Well, that's a great question, because gold miners, obviously the companies that produce, mine, and distribute the gold itself, have been so underperforming. There's actually a ratio of that, miners versus gold, and it got to historical lows. I wrote an article about it this week, if you go look at my dailies. And essentially, it's much more risk averse. With market conditions go down, sometimes the miners do. But what we're seeing that is now to flip. So GDX would probably be the granddaddy of the gold miner stocks. It's just made a big move up. It's exactly what I just said. It's following out of the January trend trade. It's getting some good momentum. It's still really undervalued and could have huge potential, particularly as we're seeing gold hitting towards 3,000, and silver would be the other one, finally over $32 an ounce.
There's an ETF for that.
SLV.
Thank you, Mish.
Thank you so much.